Ladies and gentlemen, good day and welcome to the Orient Limited Q3 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touch-tone telephone. I now hand the conference over to Mr. Rishabh Das from Pareto Capital. Thank you, and over to you, Mr. Das.
Yeah, good afternoon, everyone. This is Rishabh Das from Pareto Capital. We represent investor relations for Orient. On behalf of Orient, I welcome you all to our Q3 and 9 months FY22 earnings conference call. I have with me from the management, Mr. Aditya Gupta, Chief Executive Officer, and Mr. Himanshu Jindal, Chief Financial Officer. We will have brief opening remarks from the management, followed by the Q&A session. Please note that certain statements made during this call may be forward-looking in nature. Such forward-looking statements are subject to certain risks and uncertainties that could cause our actual results or projections to differ materially from these statements. Orient Limited will not be in any way responsible for any action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements to reflect subsequent events or circumstances. I would now hand over the call to Mr. Gupta for his opening remarks. Over to you, sir.
Thanks, Rishabh. Good afternoon, everybody. Welcome to our Quarter 3 FY22 earnings call. Joining me on the call is Mr. Himanshu Jindal, our CFO, and the Pareto Capital team, our investor relations advisor. Q3 was a challenging quarter with a massive increase in manufacturing costs and a demand slowdown post-Diwali. The company stayed focused on its strategy of simplifying tile buying and selling and has strengthened sales and distribution infrastructure. This focus on fundamentals and improved execution has enabled us to pass on 100% of the cost push to the consumer. We decided to let go some projects which were at lower profitability to maintain the margin, which resulted in a drop in project revenue salience to the total revenue. The overall result was that the company has continued to make rapid progress simultaneously on each of the 3 critical financial KPIs. These KPIs are top-line growth, margin improvement, and a focus on cash flows. We have continued to invest aggressively in building brand OBL with a focus on digital. Marketing spends are about 50% higher versus last year and also up 30% sequentially. Sharing some highlights from Quarter 3, our distribution footprint is expanding. We have added 112 more channel partners during Quarter 3. This is in addition to the 600 plus channel partners added in the preceding 6 quarters. Product portfolio premiumization continues strongly. We have added 1,400 SKUs, stock keeping units, in the last 4 quarters, trailing quarters, and this contributed to almost 1/6 of Quarter 3 revenues. The chain of physical display stores, OBTB as we call them, Orient Belt Tile Boutiques, keeps getting stronger. We have added 27 more OBTBs in this quarter, taking our total to 276, which basically means that we added a new OBTB every 3rd day in Quarter 3. Capacity utilization at our manufacturing units remained robust at 91%. This is after factoring the increase in our wall tile plant capacity at Secunderabad by 0.7 million square meters in Quarter 3. More capex is underway at the moment across our 3 plants, and this should get completed within the indicated timelines and will help scale us up over the next few quarters. With this, I request our CFO, Mr. Himanshu Jindal, for the financial and other updates. Over to you, Himanshu.
Thanks, Aditya. Good afternoon, all. One of the best 3rd quarter for OBL, both in terms of top-line development and also profitability. Our Quarter 3 volumes were up 6% YOY, and there was also significant gain on the ASP front. which allowed us to grow 17% YOY, resulting in the revenue scale up by 25%. For the first 9 months of this fiscal too, our revenues were up 37%. Volumes grew 24%, and ASP improved by 10% on a YOY basis. To give you some more color on the price increases taken so far, so we've largely had 3 main rounds of price revision announcements. For own manufacturing, we have increased prices by 3 to 5% each in April, September, and then in November. And for the traded products, the price increases announced were far more steeper, in the range of 6 to 8% each in September, October, and November. So bulk of the improvement in pricing in a way was concentrated towards the last 3-4 months. Again, energy and the other input costs continue to stay elevated, but with timely and effective implementation of ASP increases coupled with the consistent improvement in our consumption KPIs and also the better operating leverage, our EBITDA margins have expanded further to just around 11% in quarter 3. While for the 9-month period, the EBITDA margin improved to 7.3%. You'll remember that there was an impact out of the lockdowns in quarter 1. In 9 months so far, already we have achieved 87% of both our top line and also incidentally the EBITDA. That was reported for the full 12-month period of the last year. Also, as against a PAT loss in the first 9 months of the last year, we were much stronger with a consolidated PAT of 15.7 crores this time. Working capital continues to be healthy as well. Our core cash conversion cycle continues to be less than 20 days, and our balance sheet continues to stay strong as well, with a net cash of 21 crores as on 31st December. Additionally, on the ongoing capex projects, the modernization of our volatile plant at Secunderabad, adding 0.7 million square meters of capacity, was already completed in the last quarter. There are 3 more scale-up capex projects that are underway currently. One for debottlenecking our existing GVT line at Secunderabad, which will add another 0.7 million square meters capacity, and 2 new projects announced in October 21 primarily to cater to South and West markets, which will additionally add incremental volume potential of 3 million square meters to our capacity. These are expected to be operational within the timelines indicated earlier. I think with this we can move to the Q&A. Over to you, Rishabh.
Thank you. Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Achal from JM Financial. Please go ahead.
Yeah, good afternoon, and thank you for the opportunity. Congratulations for the great performance in a tough quarter. What I wanted to check is, in terms of the demand scenario, how is it according to you? Is it just steady, or are you seeing a pickup in the demand? Because I presume there is an element of market share gain. So just thought of getting color from you, sir, on this.
Thanks, Achal. See, we have for the last about 1 year maintained that the fundamentals of the real estate industry are getting stronger and better. There have been challenges currently because of Omicron and all, which are more short term, but the long term drivers seem to be in place. So I expect demand to keep on getting stronger for the overall building and construction materials. There could be, and I think there will be, this short-term uncertainty and volatility depending upon pandemic or some other factors. But the long-term drivers are intact and in place.
Understood. Just one more question on the industry. In terms of the situation on the export front, we hear that the exports have seen a fair amount of drop in last couple of months. What is your outlook, though we do not participate in the export directly as such, but I just wanted to check if there is a risk of, a supply from Orbi into domestic market in such a scenario?
Thanks, Achal. So, the data which has come out, one data point which came out was in December 22 versus December 21. There was a 17% drop in exports for the industry. This is largely from the Mundra port. So you are right that exports are not doing as well as what was envisaged, purely driven by the container freights. Container freights to the major markets are up 8 to 12 times from what they were about a year back. There has been some softening in the third quarter, but still container freight rates are extremely high. And once this situation normalizes, it might take 3 months, it might take 6 months, but once it normalizes, I think the competitiveness and the price quality equation of Indian exports being so good, this would be there. But in the short term, you are right. This could be a party pooper because some of this capacity would get diverted into the domestic market.
Got it. And just one more question for us. I know you wouldn't give a specific number, but just a range given.
Excuse me, this is the operator. Achal, can you speak a little closer to the phone or a little louder?
Is it better now?
Much better. Thank you.
Yeah, sorry about that. So what I wanted to check is, in terms of the capacity addition, so we are adding a fair amount of capacity. What kind of volume growth would we look at from next, 12 to 24 months perspective for us, given the capacity addition and the market share gains? And any comment on the margins, over next 2 to 3 years?
So, Achal, we have this policy. We do not give futuristic guidances. I'll try to answer in a different way. The capacity expansion plans that we have already announced so far give us a clear runway of going up to about, say, 1,100 crores of top line, which basically means, if I just average it out, say 250 to 300 crores a quarter. So there is sufficient and enough runway available with the current capex projects that the company is working on, which will all get capitalized in this calendar year. So that is not an issue for us. And the reason that we are so tightly focused on, you also asked about margins. I think if you see the last 7-8 quarter margins for Orient Bell, the answer is right there. There is a very tight focus on cost management. I also mentioned in my opening remarks how we have passed on 100% of the cost push to the consumer. I think not many of our competitors or some of our competitors have taken different strategies. We chose to pass on the whole cost push and still were able to get slightly better margins. So I think that work will continue. We are quite conscious of the fact that our margins are lower compared to the market leaders and all, and so there is a lot of opportunity for us to grow that.
Perfect. This is very helpful, sir. Thank you so much and wish you all the best.
Thank you, sir.
A reminder to the participants to ask a question. You may please press star and 1. The next question is from the line of Rohit from Santava Investments. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. I just wanted to know what will be our gas prices for the last quarter, the average gas price.
So Rohit, this is Himanshu this side. Gas prices for us at Secunderabad, like I mentioned in our previous calls, is all linked to the, let me say the trailing 3-month crude. Yeah. So for us in the last quarter, on an average, I think we paid something around close to 43 rupees per SCM, which is way cheaper than what is prevailing across geographies. At Hoscot, which is the Bangalore plant, which is a CGD plant, something close to 50, yeah. Little shy of 50 was the average, and Dora, which is the APM plant, so we get subsidized gas there. So that's where things are. So it's much way cheaper than what it is at any of the other plants. Yeah?
Great, sir. So thank you. And my second question, are we planning any price hikes in Q4, or have we taken any in the month of Jan? If you could just give me some guidance on that.
No, Rohit, we have not taken any price hike in January, and as we speak, we have no firm plans. But as I said earlier, if there is a cost push again, say theoretically if the gas prices were to go up, then we would definitely evaluate that.
Great. So that's all from my side. Thank you, and all the best.
Thank you. The next question is from the line of Devanshu Sampat from Yes Securities. Please go ahead.
Yeah, hello, sir. Good afternoon. So just two questions from my side. So you mentioned in your opening comment, about how the buying experience is different for us from the rest of the industry. So can you please elaborate a bit on that? And secondly, just what is the saliency of the project business? You said that we let go of some business this quarter and because of lower margins, but in general, what is the outlook or the target, and whether this will just be a short-term phenomenon? These two questions from my side. Thank you.
Thanks, Devanshu. So I talked about this buying process. I kind of make it a point to mention it every time. I'll just take you back a bit. See, we are a small player, and we have much larger competitors who have over the years, built various modes in terms of brand presence, in terms of distribution, width and depth and all. So from the day that I came in, we are very clear that while we keep working on distribution, we keep working on displays and marketing and brand design and all, but just doing what everybody else has been doing for the last 10-15 years is not going to be good enough. We need to leapfrog, and that's why we have set ourselves the goal, the vision statement, so to speak, of making tile buying and selling easier. There are multiple stakeholders in this whole tiling process, from the contractor, if it's a project, then there's an architect, then there could be a government officer. So there are 4 or 5 levels of approvers, so to speak, each with their own requirements. And we have worked on this to take friction out of this whole buying process and the selling process for our own teammates, which helps us increase our productivity. There are, I would recommend that you go and visit our website out there in the public, which is, I would say, the most frequently visited website across the tiling industry. Our traffic in the last 3 years there has gone up by some 30 times or something like that. And there you will see a host of tools which anybody can use to see how a tile design which they might like actually looks in their own drawing room, in their own bedroom, and a host of other solutions which have been deployed at a channel partner end for our field force to make them to help them sell better. Does that answer your question?
Yes, sir. Yes, sir. So that was question one. The question two was about the project business.
Yeah. So I'll talk about that a bit. Thanks for raising it, Devanshu. I think last time also you had talked a bit about projects in the last quarter. See, this question about projects, we realized this is our fifth earnings call, and this has come up multiple times. So before I answer that, what we have decided as a company is to lay down a certain definition for what we call project, so that we can give you accurate figures and they are comparable from quarter to quarter. We have taken a definition which is that in a project, in a quarter, if a project definition is a construction site which is consuming 3,000 meters of tiles, which is 1,000 meters a month for 3 months, 3,000 meters. So we have taken that as the cutoff. And when we did that, the exact number for quarter 3 was, just give me a minute, I'll just take it out. It was 21% was projects in quarter 3, and this is the logic which we will use in future earnings call also. Just to give you a sense, this was, you talked about salience, yes, this was about 4-5% lower than quarter 3 of last year. Same criterion, same rule. And this we feel, okay, your third question was whether it's long-term or short-term. This is totally a short-term measure. You would recall that third quarter there were very steep price increases. Prices were going up every 2-3 weeks. And the project business is such where you have to give a price guarantee for anywhere up to 6 months. So we went a bit slow on this business because we were not in a position to give long-term 3-month and 6-month price guarantees, and because of which we had to kind of withdraw from some projects. But now that pricing seems to be settling down, I see this not impacting us going forward.
Got it, sir. Okay, that's it from my side. Thank you, and wishing you and the team all the best.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Can you hear me?
Yes.
Can you just share the name again? I just missed that. Sorry.
Yeah. Can you hear me?
We can hear you, sir. The participant name is Dixit Doshi.
Okay.
From Whitestone Financial.
So a couple of questions. One, our if I see our gross margin, including the power and fuel cost, it's in the range of 37-38%. So how do you see, is there a scope for increasing it, let's say, once the, gas prices settle down, and if we can improve on this through, improve of share from vitrified tiles from ceramic?
So you're right, the margins are 37, 38, roughly thereabouts. I think what we need to benchmark this is the competition. When you look at listed players reporting their numbers, our margins, I think, are more or less in line with what they are reporting. In fact, whatever results I saw this time, I think we posted fairly decent gross margins, in comparison to whatever others have so far come out with. Can it be improved, Dixit? Obviously, there is a scope. We always try and figure out, what best we can do in terms of our fuel mixes, our power mixes, in terms of the rates, etc., raw material mixes, etc. So there is definitely a scope of improvement on the cost front. But, largely, you're right, gas is the largest component, something where we don't have a control on. And whether this can be passed on to the markets in that same proportion or not, only markets can tell. So I would say, the effort is very clearly on to ensure that the gross margins improve more. But please look at it relatively with the competition.
Okay. Okay. And my second question is regarding this new project announced in October 21. So there are these two expansion. One is conversion of Dora plant, and one is upgradation at Ascote plant. So can you just so it is mentioned that combined incremental capacity will be 3 million square meter. Can you just bifurcate how much between the both?
So, it's a little complex in the sense that, one is only a conversion of capacity. So you're not really adding any volume per se in your own capacity. You are only, so the way it will play out in Dora, the low-hanging, low value, low contribution products will be taken out, and they may perhaps be outsourced. Yeah.
Okay.
And through that, we'll get an incremental volume potential. That is roughly around 1.2. The balance pertains to Hoscot, which is an actual increase in capacity. This answers your question, right?
Okay. Yeah. And what is the total capex for both this together?
42. 42 is what we
40.
mentioned. Yeah.
Okay. And mostly through internal accruals only?
Largely, yes.
Okay. That's it from my side. Thanks.
Thank you. The next question is from the line of Keshav Garg from CCIPL. Please go ahead.
So many congratulations for excellent set of numbers. And sir, I wanted to understand that in third quarter, we did the same top line and EBITDA that we did in the fourth quarter of last year. That is 184 crore top line and around 19 crore EBITDA. And since fourth quarter is seasonally the peak season for us, and which performance we could replicate in the third quarter. So is it fair to assume that in this coming fourth quarter, we'll be able to grow both quarter and year on year?
So Keshav, short and sweet answer, yes, with one caveat that if anything last 2 years have taught us is that forecasting is a very risky business. It's better to kind of stay focused on execution than forecasting. But to your question that would we get growth year on year and sequentially, that's what we are trying to do. That's what we should hopefully get.
Okay, sir. Great. And sir, also, sir, just I was comparing your numbers with a smaller player, which is a recent listing, XRO Tiles. So this company in the third quarter, so their top line is 85 crore, less than half ours. So but still they are doing around 15% EBITDA margin, and we are doing 10% margin. So on a higher base. So how is this explainable?
See, I don't think we want to get into what the competition does. So without commenting on competition, I can only say that yes, in our own case, like I shared with Dikshit also, our gross margins are more or less in line or even better than most of our competition now. I think we are working on scale, and this is what is important. The other thing that you should appreciate, there are certain expenses that we are doing in terms of, our long-term strategy, which is people, which is displays, which is marketing, which is branding. So we are spending that money, we are not cutting corners. And all of this would obviously help us scale up much faster as and when, there are opportunities in the business.
So, sir, and sir, just lastly wanted to understand, sir, like you mentioned that post Diwali there was a slowdown. So keeping that in mind, sir, still you would say that, is that slowdown continuing in the fourth quarter, or are things on the mend?
See, things were a little slow. Like Aditya mentioned, we have taken price increases. We took some decisions, again, from a medium to long-term perspective. Yes, things were a little sluggish. But thereafter, I think, even the lockdowns, the partial lockdowns, etc., which were announced in between, did have an impact. But having said that, these are all long gone. We are back to normal.
Sure, sir. Thank you very much and best of luck.
Thank you.
Thank you. Participants, to ask a question, you may please press star and 1. The next question is from the line of Apurva Mehta from AM Investments. Please go ahead.
Yes, sir. Congratulations on great numbers. So I just wanted to ask about this increasing marketing spend, almost 50%. So where we are spending and how we are, where we are actually spending this marketing spend. Can you just guide us, and what is our goal on this marketing spend?
So Apurva, our strategy is consistent, hasn't changed. We continue to spend on digital. That's our prime area. We continue to spend. There are various activities you've done. I wouldn't to take you through each one of them. But our focus is on digital media. We continue to invest in creating tools and in popularizing our tools with various stakeholders, whether it be architects or channel partners or contractors. That is another area of focus for marketing. And of course, the traditional we shoot commercials, we have product specific commercials, we push them out, we buy keywords on Google, and so all of that kind of gets done.
So it would be region specific normally spent. This marketing spends are region thing, or we do on an a kind of all India based kind of thing.
Apurva, your voice is not very audible. Can we have a better line or something? Is there a possibility for you to switch?
Yeah. It's clear now.
Yeah, better, much better now.
Can you repeat your question, please?
Yeah. I just wanted to know this region specific any spends are there, or we do it on the all India based thing,
So it is a mix of both. So the advantage of digital media is that it allows you to target far more pointedly than what traditional media allows you to do. So that's what we use. But you would across the country, by and large, you would see traces of our digital spends everywhere, whether you are in Bombay or whether you are in other parts of the market. Obviously, there are some weightages in terms of the salience of that market for us, like any other media spend.
Yeah, and on the OBTB side, can you throw some light? What is our current sales generating from that particular sector which we are targeting now? So what amount of sales are we generating from that, specifically from OBTB?
So Apurva, it is just slightly better than 1/3 of our total sales gets done from our OBTBs.
Okay.
And as I said, we have about 27 new OBTBs which we launched in this quarter. Yeah.
And this run rate, we will continue to go ahead with that, and we seeing traction from people opting for OBTB.
So yes, this is a model that we'll continue to follow. You will remember that we already, like what Aditya also mentioned separately in other calls. So there are two models that we use. One is this OBTB, which is the brick and mortar stores for our displays, and the other are those visual tools which are available on our website with the channel partners, etc. So both these models will concurrently continue, and I think we would want to scale up investments into them as well going forward.
Okay. Thanks a lot, and wish you all the best.
Thanks, Apurva.
Thank you.
Thanks.
Thank you. The next question is from the line of Nayan Gala from Etica Wealth. Please go ahead.
Hi. Good evening, sir. Congratulations on a good set of numbers. I had a couple of questions. Sorry, I have joined late. I'm not sure if you have answered that. I just wanted to understand the demand scenario and also the Omicron wave, the third wave, which was hit in Jan. So did we see any impact of that on our business?
Yeah, this was actually the first question, then which was discussed. So I'll repeat what I said. We believe that the underlying drivers for our industry, which is the real estate market, is doing well and continues to do well. There are short-term blips, like definitely the Omicron issue you referred to, which will come and go, which will impact us in the short term. But on a longer term basis, I think there's quite a secular growth trend that we see.
Okay. And in terms of, sir, geographically, from like tier 1, tier 2, tier 3, so which are the segments or which are the areas that we target more and we see demand from which areas?
So we are seeing more demand coming from, tier 2 and tier 3 cities versus tier 1 cities. So that trend continues.
And all.
Yeah,
sir. Go ahead, please.
Yeah, so quarter on quarter, we are seeing a slightly higher salience from tier 3 cities in our sales.
Okay. And this will be like retail sales or institutional sales? Like.
I haven't done that breakup, but my sense would be largely retail sales.
Okay. And in terms of the sales mix, if you can just give a rough breakup in terms of what is the institutional and what is the retail sales for our during the 9 months, if you have that number.
So I'll not repeat the full answer, but it is 21% for the quarter, 21% quarter 3 project sales.
And for the full year, for 9 months?
It will be the same. It will be slightly higher actually, but maybe about 20 to 26. So we had 26% in quarter 1, 21% in quarter 2, 21% in quarter 3.
Okay. Okay. Yeah. Thank you. So that's all from my side.
This was in terms of volumes, not in value. Yeah.
Yeah. Got it. Yes.
Okay.
Thank you. Reminder to all the participants to ask a question. You may please press star and 1. The next question is from the line of Kamlesh from AMSEC. Please go ahead.
Hello. Am I audible?
Yeah. Please go on.
Yeah. Just you mentioned the project sale is 21-22%, right?
Yes, correct.
So will it also include the government project, government business as well in that, or it will be add on to this?
So sorry, I didn't get your name. Kamlesh.
Sorry?
So Kamlesh,
yeah.
As I explained earlier, this includes all projects which have consumed 3,000 meters or above in a quarter. So this has a mix of both government and private projects.
So just can you highlight how much will be government part of the revenue and how much will be export revenue from our total revenues?
So I think somebody asked me this last time also. A bit difficult to say, Kamlesh, because a lot of these projects go via the retail channel and we have limited visibility to who the end consumer is. But my sense is that the needle is shifting more towards private projects compared to government projects.
Mm-hmm. Any ballpark range you would give?
I have not done that number, frankly. I don't want to kind of hazard a guess.
Sure.
But I'll just give you a sense. Okay, let me try to answer it. I said about 21% is projects, correct?
Mm-hmm.
Now, about that 21%, about half of it is what is done through the large enterprise business, and half of it which is done through the channel partner. So 10% each.
Mm-hmm.
So on the enterprise business, I think the breakup is about 25 to 30% is government and 70% is private projects.
Okay. And then how would be exports market for us? Is it significant?
Absolutely, totally insignificant.
Okay.
The reason is that export, you don't have a brand there. You sell on price, landed price.
Yeah.
So it is currently not a focus area for us. Maybe in the future we might get into it.
Sure. And I don't know whether you have given this region-wise sales in terms of north, west, south, west. Do you have any range?
It is there in investor PPT. You can just. Oh, sorry, it's not there. I'm sorry. So
not there. So Kamlesh, you can say between north and east, we still do roughly around 70% of our sales. The balance comes from south and west.
30% from south and west. Okay. And lastly, sir, since we have got a strong foothold now in the tiles business, are we looking at the adjacencies in terms of bathware or faucets or any other products as also an extension of our business line, or that's something which is not we are looking at?
No, Kamlesh, we are not looking at any adjacencies. We feel that there is enough and more in the tile segment itself that we can focus on. So all our resources, everything is going to go into the tile business in the near future.
Mm-hmm. Okay. And lastly, out of the total capacity that we have, how much of our own capacity would be of vitrified tiles?
You have the number, is it?
Sorry, I missed the question.
Vitrified capacity, you have the number separately?
Just say.
I think it would be largely in that same ratio of say 60-45 or something like that, because we had 91% capacity utilization. So I'm assuming it would be. You have a different figure, don't you? Just hold on.
Please.
Because MF2 also. See, MF2 also you are doing now vitrified, and also I don't know whether you can. This is not the right distance.
Okay, Kamlesh, there is. It would be in the range of. So if you count my JVs also, see, Concall also does double charge, which is also vitrified. Correct?
Okay.
If I count that in and I count all the other capacities that I have today, so you can say roughly anything that's close to 1/3 would be broadly vitrified capacities. You would recall we are doing more capex right now. We are converting one line from ceramic to vitrified in Dora. We are also adding more capacity in the GVT line that we already have. So that should give us more and more joy going forward.
Kamlesh, I'd just like to add one thing. I'm just guessing that why you asked this question, why it's important for you, is that vitrified is a higher margin and a higher selling price product. Am I right?
Exactly.
So just want to tell you one thing, that even the ceramic capacity that we have, this 2/3 which Himanshu spoke about, over the last 1 to 2 years, there has been a concerted premiumization trend. So there has been an improvement in the realizations that we are getting on our ceramic capacities also, by changing the product profile and stuff like that.
Okay. And is it the same range, like you said, this is about the capacity, 1/3 maybe around from vitrified. So in terms of the volume that we did this 9 months, 66 lakhs meter square, how would be vitrified share out of that? You said it's plus 4%.
45% is vitrified approximately, and 55% is ceramic. So give or take 1 or 2%.
All right. Okay, sir. Thank you very much. That's it from my side. Thank you.
Thank you. Reminder to all the participants, to ask a question, you may please press star and 1. Ladies and gentlemen, this was the last question for today. I now hand the conference over to the management for their closing comments. Over to you, sir.
So thanks everyone. Thanks for your patience. Thanks for your interest in OPL. Feel free to reach out to any of us in case you have more questions. I think with this we can call it a day, Rishabh.
Yeah, sure, sir. Yeah, thank you, everyone.
Thanks, everybody. Thank you.
Thank you. Ladies and gentlemen, on behalf of Orient Well Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.